Hey, what's up, traders? Saturday morning, I thought I would go over a few of the trades that were called in the chat room this week. Not for a look what we did, but instead a look why. Here's why we did what we did. Because day trading videos should be educational, not braggy, if that makes any sense. So let's talk about a few of them because I want to teach people that day trading isn't guessing, right? There should be several reasons why you take every trade, and I'm hoping in this video to convey those reasons for the calls, some of the highlights from the week, right? So DWAC gapped up big on Monday and had a big rip. So how was it called in chat? Let's go to 15-minute candles to kind of clean it up, and I can scroll over a little easier. All right, so let me explain DWAC, which was called on Monday by Matt D over 23, right? But this is the important part and hopefully the big lesson. So DWAC comes up to 22.90 at the open. Remember, these are 15-minute candles. Sells off and then comes all the way from the low of day pretty quickly up to that 23 area. Hits 23, then look what happens. Breaks 23 and whoosh. Now, why does that happen? Because people that took the high of day break, which is basically over 22.90, didn't give any, thinking it's going to squeeze because you had the gap up and then the sellers fail over the high of day. It's one way we put it. But why didn't it work? Why did it do this? Because it had come too far, too fast. No way I'm taking that high of day break there. But the beauty of it is it breaks a whole number 23, does this. Now it becomes super interesting back through 23. Why? Because now more shorts came in, and when it gets back, we've got a whole number inflection point now. We've got a whole free webinar on those on our free webinar page. We've actually got 2 webinars on inflection points. So we break 23 again. You've got the 23.16 high that it just put in as a catalyst where shorts are really in trouble, right? But now you've got also a scenario where it hasn't come that far to break it, unlike from all the way back down here to here. So we've got what we call a second mouse play. Think about a mousetrap. Second mouse gets the cheese. What happens to the first mouse? The first people that buy that high of day break. This is what happens. The guillotine right here, right? Second mouse gets the cheese because the first mouse is dead, and now we sneak in, take the cheese. Great idea by Matt D. Back through 23 second mouse. By the way, you notice it never looks back. So that was the explanation of DWAC, how it was called in the chat room, and hopefully you understand why, right? Let's look at RUN next. This one was actually called by me, and believe it or not, all the way up at 28.88, which is probably right there on the daily chart. And you might say, hey, that kind of made a big move. Why were you chasing it up there? Well, let's go to the intraday and look at that. So you're right, I did miss the big move, but at this point, there's the big move. At this point, we established, okay, solars are hot, right? No pun intended. And back in the day when I'd see something like this, I would either be a fool and chase it, or I would say, well, I missed the move, on to the next one. And now I've trained my brain, and hopefully a lot of you in chat, to say, okay, this has made a big move. Where can we get in on a pullback, right? And those of you that know me in chat know, hey, fives buy zone. If you don't know what I'm talking about, we also have a free webinar on pullbacks that you can watch on our free webinar page. So I'm looking in the fives buy zone, which is kind of the middle of the red and blue line here. And I love it below. If you see a whole number in there, I like the whole number flush. So it's one of those that kind of 80s pullback plays where if you bid in the 28.80s, again, we covered this in our free webinar, it went down to 28.82, I think. Yeah. So if you were in the mid to high 28.80s, which is where we were looking, you caught the turn exactly, right? And it ended up going from that 28.80-ish area, 28.88, I think is where I got filled, all the way back to 31.24. And the cool thing about that is it had a huge move that we missed, or I missed, but still got in on a really, really nice move. So, you can take the second mouse on some stocks, or you can, if you miss a big move, you should still be thinking pullback. Let's talk about TTD, which was called at 46 by Keith F., and that would have been on Thursday. There's the day right there. Now, Thursday, everything gapped up. So it became tough to try to find something. But a great post by Keith F. over there in Ireland. What happened? You had the gap up and the big rip, but notice it tops out right around a whole number 46. Keith gave the idea back through 46. We've got another inflection point, whole number inflection point, but not random all by itself. You've got another catalyst above the previous day's high at 47.25, which is the way this thing trades. $1.25 above is pretty close the way TTD trades. So Keith gave the idea back through 46, and look what happens. Never looks back, goes all the way up to, I think, 49. Really nice post there. Let's talk about Amazon real quick, which was called by Nick C. Same day and back through 93. But let's explain the setup. So everything gapped up. Remember, Amazon pretty strong like the rest of them. Notice it opened right around 93. So the explanation there is Nick C noticed that and said, hey, at 93, you've got another whole number inflection point with the high of day above as another potential catalyst if it gets to that. Plus 93 is a red to green by the way we define it, which is back through the opening price. Some people call red to green through the previous day's high. For our teachings, we say red to green is back through the opening price, which if you picture the daily candle, at this point it's red. The daily candle turns green when this thing gets back through the open, right? So 93 with a potential catalyst above of the high of day, and it made a huge move too. So you notice all these entries basically work right away, and that's the entries we look for in chat. That's the entries we teach in our course. I'll give you one more example from the week, DOCS, and this was Kevin P pointing out the 31 break. Another example of a stock that gapped up big. And this wasn't on Thursday, this was Friday. Gapped up big but topped out right at a whole number, and we have a seller's fail scenario. In other words, people that shorted the gap up. Oftentimes shorting a gap up is very successful for the shorts, but when they fail, they usually fail hard. So you've got a whole number inflection point, seller's fail scenario, the way we define it, back through 31, and ends up ripping all the way to 35.43 by the end of the day. And a really nice heads up by Kevin P. There's some examples of stuff we trade and why we trade them. If you enjoyed this video, please share it. If I tweet this on social media, please share the video. We're trying to get the word out that trading isn't guessing and it isn't gambling. You can put the odds in your favor if you take the entries at the right places, and you should be able to define every entry you take and explain it and give at least 2, if not 3 or 4 reasons why you're taking that entry at that price. All right, guys, I'm done babbling. We'll talk to you later.